Testing 1, 2. Can you hear me okay? Are we okay sound-wise? Do we sound all right? Okay, all right. Hey, thanks for waiting, folks. I'm back. Ed Ponsi here, your FX educator here on behalf of FX Street one more time. Great to be here with you. Thank you so much for being here. And it is the last day of July. For me, it's the last session of the month, but I'll be back here with you again tomorrow, I believe. So just check the session schedule here really quick. Yes, I'm back here with you again tomorrow for 2 more sessions. So, and on Thursday as well. So it's great to be back around again. And then next week as well. So it's good times. I don't know. Did you guys catch this on Friday? This is unbelievable to me. You've got to see this. Okay. I'm going to show you the S&P 500, and this wasn't Friday, it was Thursday. Look at Thursday's candle. Big hanging man candle, right? Now, do you know what caused this? We actually gapped up, and it was very quiet for most of the day, and then we shot way down. And this entire loss occurs over 1 hour, and then we regained most of it. Now, just to show you how you think that this market is logical, you think this market runs on logic, I'm going to show you what happened here and why. I'm going to show you a 5-minute chart. And you're going to see what happened. A note came out from a JP Morgan quantitative analyst. And this analyst compared the activity. I'm just going to zoom in on 1 day. So we gap up, and look how sleepy it gets. We gap up, and then the market falls completely asleep for hours. And then at what should be the sleepiest time of day during lunchtime, the S&P 500 drops 20 points, a huge drop in 1 hour. What happened? A note from a JP Morgan quantitative analyst begins to make its rounds, and he's comparing the current market to 1987. But what is it about the current market that he finds so disturbing? Why is the current market so similar to 1987? And I know most of you probably don't remember this, but in 1987, there was a stock market crash. Percentage-wise, it was a pretty big one, although the market did recover fairly quickly. But what was it? What is it? It's a lack of volatility. Lack of volatility. And he says, well, guess what, folks? The market's not volatile right now. And the market was not volatile just before the crash of 87. And therefore, the market might crash now. That is, so really, the market's afraid that a lack of volatility is going to cause a sell-off. And that's why there was a sell-off. If this sounds absurd to you, then you're on the right track. It is absurd. It makes no sense. All right? And that's where we are. Now that is typical. I don't know. I wouldn't know if I'd call it typical, To me, that sounds awfully panicky. Like we're looking for reasons to panic. But cooler heads prevail and use it as a buying opportunity, and we regain most of the loss. But that is a very weak reason to sell off. Very weak. You're telling me that we're frightened because of a lack of volatility? Volatility has no direction, and therefore a lack of volatility has no direction. Just because something bad happened and it was preceded by a lack of volatility, that does not mean that the two were connected. And I'm sure that if you look hard enough, that you will find very positive things that happened that were preceded by a lack of volatility. This is pure silliness, and yet buying opportunity. This also nearly wrecked, I'm sure it wrecked some Forex trades too, because when the stock market gets really weak, what gets strong? The Japanese yen becomes strong. So, you know, there are always implications. But I just wanted you to know, just in case you think, and because some people think, well, I have to become wise and intelligent to understand this market. It's such foolishness at times. This is pure foolishness. And now you know, right? That's what happened. So they say the only thing to fear is fear itself. This move is pure fear. And it's a silly fear. So now you know. I guess that's a hanging man, right? I guess that's a rather large hanging man pattern now that it's formed. Hanging man is a bearish pattern, but I also think that hanging man is probably one of the least effective candlestick patterns. What does this have to do with Forex? Everything. Right? Because if the stock market sells off, then the yen's going to get very strong. Right? But I don't think it's going to happen because hanging man patterns, in my experience, and I don't have any research or I can't show you any figures to back this up, but in my experience, hanging man patterns fail quite frequently. And I've seen them fail often enough. I've written books and created other presentations about candlestick patterns. And believe me, I've had a hard time finding ones that succeed. And whereas it's very easy to find, so let's say, hammers and shooting stars that succeed. The world is full of those that succeed, and dark cloud cover and patterns of that nature that succeed. But hanging man, sorry, it's just not a winner. It dropped all the way to the gap. This gap here got filled. Yeah, it's funny. I can still hear, when I worked on Wall Street, I sat with a guy. I was a junior trader on his team, and he used to have this mantra that I can hear him say it now, all gaps are filled, Ponsi, all gaps are filled. He would just had such a strong belief that all these gaps would be filled. And to be sure, not every gap gets filled, but a lot of them do. And he would set up trades that would assume that gaps would get filled, and he would get a lot of winners that way. And the trades would seem so unlikely. If you didn't know what he was doing, you know, you would think, what's the point of this trade? And And yet, but if once you got to understand what he was up to, yeah, that gap certainly does fill. Right. It's funny how that happens. Okay, let's get back to, and that is definitely a Forex issue because, um, funny thing, right? I was trading Canada yen, and Canada yen fell to an area of support. At the same time this was falling, intraday, Canada yen was falling. I think this was it here. It just dive bombs, right? And it just comes to an area of previous support or close to it. And it finds its legs and it takes off. It was great. Um, so it dive bombs on that news, on that silly sell-off, and then it takes off on Canada GDP. I don't know if you saw Canada GDP last week, but they're expecting 0.2 month over month, and they got 0.6. So everybody's ramping up their expectations for rate hikes in Canada. At the same time, we're lowering our expectations in the U.S. So it's a thing of beauty. You've got this ridiculous sell-off in U.S. stocks, and then you've got Canada GDP pushes it right back up. And in the middle, it sure looks like an inverted head and shoulders or something of that nature right here. It's funny how that happens. Anyway, that's just for intraday. At times when the gap is followed by what is referred to as an extended range candle, tends to be a stronger area. Yeah, I don't really talk about ERCs very much, extended range candle. But yeah, that's something that you do hear about from time to time. That's definitely a legitimate form of analysis. Canada yen is not something that we've looked at, but this thing has had a tremendous run. And it looks like to me like that run has stalled out. When I see something like this, I'm not really thinking about the moving average strategy that we looked at earlier. I'm really thinking about Fibonacci because this is a rally that's stalled out. And I'm thinking it's probably going to pull back. But I'm not really looking to play the pullback. I'm really looking to see, okay, you're going to pull back, but how far are you going to pull back? I've really simplified my Fibonacci here. Try to get from the low to the high, let's say 38.2. On CAD yen. CAD yen is something that, this is the currency pair that for the longest time I believed, and I think a lot of people believed, that this was a currency pair that was going to be heavily influenced by the price of oil because Canada is such a big exporter of oil and Japan is such a big importer of oil. But if you match the charts up, the chart of Canada yen and the chart of oil look nothing alike, and they have no correlation. So I guess that's because even though factually it's correct that Japan's a big importer of oil, Japan doesn't correlate to that. Japan does not have a negative correlation to oil. Japanese yen has a more of a correlation to stock markets than it does to oil or any other commodity. But at any rate, I would be looking for a pullback here to the 38.2 is what I'm thinking. And that is 86.35, approximately 86.35 for the pullback. Just a thought. For Canada yen, just in case anybody wants to. The one good thing about Canada yen is this, that it doesn't really correlate to anything else that I'm involved in right now. I'm not currently involved in dollar Canada, although that could change. And I'm not currently involved in Aussie yen, right? I'm not currently involved in any yen pairs. I'm not currently involved in any Canada pairs. So it's something that I could get involved in. Although, you know, dollar Canada is a greater priority right now. This is something I'd have on the back burner also. Dollar Canada is the priority, however. This is a long way from the entry as well. Okay, this was doing a little short-term trading on this. Okay. What about the pound? We haven't looked at the pound yet. Pound is just creeping higher. Now, we can get rid of all this. All these lines can go. It's definitely an uptrend, but it's not like a really clean uptrend. It's not something we're going to be using a moving average. Carlos saying, I use a template that allows for 6 and 3 months as well as monthly charts on the screen at the same time. Well, yeah, you're definitely looking at longer term. It says it's helpful when looking at macro structure. I'll tell you what this looks like to me. It's certainly good advice. I certainly commend Carlos's use of longer term charts and looking at longer term plays. That's how you get big winners. Looking at this chart, this certainly looks like, now that's an inverted head and shoulders, correct? But it's in the wrong place for a reversal. But did you know head and shoulders can also be a continuation pattern depending on its location? So this very much looks to me like a continuation head and shoulders. And we're definitely in an uptrend. Higher highs and higher lows. Here on the daily, look at the trend line. I worry about the steepness of it. The steep trend lines have a tendency to break easily. Remember, we have a lot of bulls on the Monetary Policy Committee. We have 3 bulls, which really took a lot of folks by surprise. You're going to need 5 to get a rate hike, so I don't think you get a rate hike. The reason being there are 8 members on the committee, but one of the votes, the head of the Monetary Policy Committee is going to, the head of the Bank of England is going to vote to hold rates. So you're going to need a 5th vote to override him. You got to go 5-3 again. You got to go 5-3 in favor of raising rates. Right now it's 5-3 against. I don't think you're going to get there. I don't think anyone believes that you're going to get there. But it doesn't really matter right now. Against the dollar, this is strong. Against the euro, it's a different story. Because the euro is a strong currency, the dollar is a weak currency. the euro the stronger of the two here. So it's kind of tough. I mean, euro against dollar makes a ton of sense. Pound against dollar. So euro against dollar, think of it this way. Euro against dollar is strong against weak. Pound against dollar is medium against weak. Euro against pound is strong against medium. Pound is kind of in the middle here. Do you see how this is trending, but it's not a super strong trend? Euro pound is trending higher, but not a great trend. Pound dollar, trending higher, but not a great trend. It's kind of in this nowhere zone right now. I'd rather be long than short. Your entry using RSI 1 hour overbought last week held 129.30s. Oversold rather. Yeah, you know, I was traveling and I missed it. So I guess I got the setup and everything, and I had the setup and everything, but I was on the road, so I missed it. So, but I'm glad it worked out. But now, you know, something similar could work again, like a 60-minute oversold. That's the only type of trade you can do here with pound. You can't do anything on the moving average, obviously. You know, sorry about that. That's the stock market opening bell in New York. It's 9:30 in New York City. The trend isn't strong enough for a 10-day moving average. It might be strong enough for a 20. That's worth a peek. Let's take a peek at that. Sometimes the 20 works just as well as the 10. You can see the price has not enough respect for the 10 here. But sometimes when the 10 isn't getting the job done, the 20 does get it done. Let's see if it works. Nah, it's not quite. See, the trends aren't strong enough. But I'm glad that that hourly RSI worked. That hourly RSI could work again. Let's explore that. RSI and 60-minute. We'll see if maybe we can get another opportunity there. So, you know, that's a technique that we were putting a lot of emphasis on that technique earlier. But now that we're getting a lot of moving average action, the emphasis has changed a little bit, obviously. There's a great entry back here on the hourly. That's what we need again. We need another great hourly entry on the oversold. That's what we would be looking for at this point. I don't know if the problem is, right, you can't ignore, part of me wants to say ignore British pound. Because why trade British pound when you've got the euro and dollar Canada on the 10-day? Yeah, but those entries might never occur. So you can't ignore the British pound. So you do look for the pullback, like an hourly RSI pullback. Right now, RSI is about neutral, mid-50s, right? You would want to see a dip, like a steep drop here that can push RSI down below 30, might create a buying opportunity. So yeah, we'll see what happens. But it's funny, right, that this other technique that we really hadn't used for quite a while suddenly, and that's the nature of that trending technique. I call it FX Ed, on the 10 and 20 moving averages daily. The nature of it is that nothing is happening, nothing is happening, nothing is happening for a long time. And then suddenly, oh my gosh, it's everywhere. It's happening all around you. It's just the nature of that beast. That's the way it is right now. Carlos says there's confluence with the 20 and some support at 130.20 on the daily. Some support and some resistance, it looks like here, and some support in here. So we'll see what happens. But yeah, it's trending higher. You have higher highs here, higher lows in here. Preference would definitely be to go long. What about, now we're out of Aussie yen, so what about something like Aussie New Zealand or Aussie Canada? Aussie New Zealand, of course, a huge winner for Carlos earlier this year. Kind of messy here. Carlos says as long as it makes higher highs, biases to the upside, reaches a critical area, or it forms a new one via price action. Exactly. This Aussie Canada was something that I was working with for quite a while, but no longer. See a lot of entries here on the green, and then it finally failed. Right, when this one finally failed. So you had numerous good entries off of the green, and then finally it failed. But you notice that every time it bounced, the bounce was less and less until finally it breaks. Once it breaks, I've lost interest in this completely now. I'm gonna have to find something. This is actually now no longer a long. This is actually now looking more like a short. But they're both strong. Strong versus strength here. But it's interesting to say that Canada is now beginning to look like it might be stronger than Australia, because I see the lower highs coming down here. Commodity currency versus commodity currency, but Canada stronger. Lower highs, lower lows. Now I'm thinking it's shortable. Maybe at this line. Actually, I should have been thinking that earlier. A little bit too slow. I guess it's that summertime, traveling around summertime type of thing. But this would have been a good short right up against that line, right? Maybe we get another chance. It's also right up against a huge round number, right? 1.0 parity. I don't know what more I could have asked for. You've got large resistance, a large round number. You've got a significant downtrend line. How did I miss this? Too much vacation, too much beach time, huh? It's really hard to look at your computer when you're on the beach. Everyone talks about trading while they're sitting on the beach, but it's really, it's in practice, it's not that good. The sun keeps shining off of your computer and you can't see it very well. You keep getting sunscreen on the keys and on which is, and then sand. Sand gets in everything. And you realize after a short amount of time that trading from the beach stinks. What you really need to do is trade from close to the beach, but not on the beach. Looking at the sea drinking beer is quite therapeutic. Now that, my friend, is hard to argue. All right. This looks like, I'll tell you what, this setup, I think out of everything we've been digging through. So pound dollar, just to review, pound dollar, pullbacks on the hourly look most promising. And Aussie CAD daily to the downward trend line looks most promising. So between that and the setups that we pulled up during the first session, we've certainly got enough to keep us busy. All right, I'll be back tomorrow, and we'll see if any of these setups trigger or if we can maybe find some more setups. There's always something out there, right? All right, I'm out of here, gang. Everybody have a great day. Ed Ponsi here for FX Street. Have a wonderful day. Take care.